Hello and welcome to the Think Realty webinar series. We're so excited today. We have Zach Lemaster from Rent to Retirement, and he is going to talk about how to use turnkey investing to get started, scale, diversify, and build your passive portfolio. So before we get started, just a quick reminder for anybody that's interested, our sister company, the American Association of Private Lenders, has their private lending conference coming up in October, on October 19th through the 21st in Las Vegas. You can go to APL online and check all that out. If you have any questions during there, don't hesitate to put them in the Q&A section, and we'll try to address as many as possible, time permitting. Finally, I will send out this recording, so don't worry if you miss something. We will send that out so you can kind of watch it afterwards and make sure you get all the education you need. So with that, I'm going to turn it over to Zach. Zach, welcome to the show.
Hey, Rodney, thank you for having me. We're excited to present some interesting concepts about turnkey investing as a way to scale your portfolio and diversify across multiple different locations. So I'm going to share my screen here and go through this presentation. For anyone listening in, feel free to put in questions or comments in the Q&A box. I will probably go through those at the end of the presentation here and make sure I can do my best to address everyone's questions. Of course, if you're interested to learn more about our company, to learn about investing in some of the best locations throughout the U.S. and turnkey properties, contact our company at rent2retirement.com. Our 800 number is 800-311-6781. That information will be at the end for you to follow up with. So again, let's jump right into it. We're going to talk about the benefits of investing in turnkey properties. We'll define that, and we'll use a case study example of how you can achieve $10,000 a month passive income. That seems to be a round number that we hear quite often as people are looking to obtain financial independence. They want that $10,000 passive income a month. So just to get into this here. All right, a little bit about myself. My name is Zach Lemaster. I'm the founder and CEO of Rent to Retirement. I have a background in healthcare, actually. So my wife and I started investing in real estate when I was a captain in the Air Force. I was on scholarship with the Air Force for many years practicing optometry, and then we moved to Colorado where we owned private practices. We invested in real estate that entire time. And ultimately got to the point where we were able to replace our active income as doctors through real estate investing. That didn't happen overnight, but it did happen eventually through many years of consistently investing. So we invest in single family, multifamily. We have a lot of commercial retail centers now. We've really just scaled up, continually buying more and more real estate every single year since we bought our first duplex many years ago. What is turnkey? This is a buzzword that a lot of people throw out there, like what is turnkey? And there's a lot of different definitions and people kind of using that term as a buzzword. So we always want to define what we mean when we say turnkey. For us, a turnkey property is a property that's either been newly built or fully renovated, leased, and managed by a professional management team in an area that we've identified as being an attractive location to invest in for multiple reasons, which we'll talk about. But this is really a way that someone can easily own rental real estate and have all the financial benefits of ownership without having to be actively engaged in all of the heavy lifting of managing the property, rehabbing it, identifying a location to invest in. We've already done all that work for you. And we take the word turnkey even to the next level, at least with our company, helping you build a comprehensive business model, because there's a lot of ancillary things that go alongside with building a successful investment portfolio from a tax, legal, accounting, financing perspective. There's a lot of important things you need to do to set up for a sustainable business model. And so that's what working with our company at Rent to Retirement allows for, is the ability to build a sustainable business model and have some coaching throughout the process. When we talk about turnkey, it's important to know it's not one size fits all. There's some investors that would be a good fit for turnkey and some that possibly wouldn't, based on their investment goals and criteria. So when does turnkey make sense for the investor? And we want to make sure that we're matching the right investment strategy and opportunity with the client. So turnkey is a great option for people that just want to get started. They have limited experience. They need a little bit of hand holding into identifying a location and buying that first property. People that want to be more passive in their investing career. They don't want to be an active investor. A lot of our clients are busy professionals, engineers, attorneys, doctors, whatever. They're out there with their own profession and they want to diversify into real estate. People that are looking to scale their portfolio, Turnkey is a great option to diversify in multiple different locations and scale and build their portfolio beyond the investing that they're already currently doing. Even if they're an active full-time flipper, builder, whatever the case is, Turnkey is a great way to, add in additional properties to grow their portfolio quicker than they could on their own. We have a lot of people that live in expensive markets that the real estate it doesn't make sense from a cash flow perspective. Areas like California, Washington, Oregon, New York, a lot of the coastal areas where it's a high barrier of entry and the cash flow numbers don't make sense. So they are almost forced to invest from a distance in some of the locations where they can obtain reasonable returns. So these are kind of the typical, I guess, people that I think would benefit from Turnkey. A little bit more about our company specifically. We are a turnkey provider that offers multiple investment classes across different locations. So we work in single family, multifamily, we have commercial. About half of what we do is build to rent, new build development projects that have significant immediate equity that you can be a creative investor to cash out, refinance, and reinvest your money or sell it again. So we'll talk about some of those things. We work mainly in the Midwest and Southeast. We want to identify areas that maximize cash flow, appreciation, and equity. These are locations that we've personally invested in and been successful and built teams to assist you as the owner of the property, and also locations that we've identified to set you up for success long term. How do we choose the markets? This is, a common question. There's so many different areas to invest in real estate. This is a common question that we get from people constantly as well. How do I decide on the right location? And how do I build a team there? That's part of the benefit of what we offer to our clients is we've already done that. We've identified and done all the market research, and we have a criteria to determine what are the best locations to invest in. We want to be in areas that are in the path of progress, areas where there's high population growth and economic growth, areas that have a diversity of industry. They're not just reliant on, say, education or oil and gas, something like this, an area that has a robust economy with a diversity of different industries, areas that have high rental demand and high rental rates relative to home prices. So you can actually cash flow. Cash flow is number one. That's fundamentally, especially as we're entering kind of the market cycle and economy that we're seeing today. You got to go back to the fundamentals, and your bread and butter rental properties that have cash flow are the best place to be in the most recession-proof type of investments. So we also want to look at things like taxes and landlord-friendly legislation. These are all important things to set you up for success long term. So let's talk a little bit about the ancillary things that we talked about. Beyond just buying an investment property, there's a lot of benefits to working with a network and a team that are comprised of successful investors such as ourselves. This business was created simply from our own success as investors that were able to replace our active income in a different profession. This took many years to accomplish, and we had to network with the right people. Sometimes to find the best property manager or contractor, you got to go through 15 or 20 bad ones, but we've already gone through that, and we have an established system to assist you in tapping into that network to allow you to scale your real estate over time and be a successful investor. We have real estate specific CPAs and attorneys on our team to assist with tax strategy planning, filing taxes. Each state has a different tax structure. So, that can be overly complicated sometimes if you're not working with the right people that understand these different areas. So we already have those individuals and those professionals within our network that you can immediately tap into. Also, LLC structuring. How do you do that? There's multiple ways to do that. So it's important that, you have the right people that understand your goals and that are real estate specific. If you're working with an attorney or a CPA that really doesn't own rental real estate, are they the best to meet your needs? So those are some of the people that we've already added to our network that you get access to. We have full scope property managers in each location to handle everything from rent collection, distribution of rents, repairs, leasing, interviewing tenants. We always inform people that, property management, you still have to manage your managers, right, at certain points in time, but they should really be handling everything on the property and keeping you updated about how the property is performing. As you become a more savvy and successful investor, there's certain things you'll need to navigate, like potentially financing outside of the traditional route. We have a whole network of lenders that offer anything from, your Fannie Mae, Freddie Mac loans. We have your portfolio and private loans available. We have some even seller financing options available. So there's a whole plethora of different financing options available. You can work with our IRA custodians if you say you want to invest through a retirement vehicle. We have 1031 qualified intermediaries and cost segregation specialists if you're looking at really tapping into the tax benefits of scaling your portfolio over time. And, we have a market specialist to go through and help you in identifying the best location. Our process, the first thing that we want to do is set you up with one of our investment strategists to go through your plan and criteria, your goals, your timeline, your resources, to make sure that we are matching that with the right location. And we don't charge investors anything. We make our money through the rehab and development of the properties. That allows us to operate as a mentor and a coach to you at no cost. We're not charging for education. So let's talk about how someone can potentially earn $10,000 of passive income each month through owning rental real estate. And this isn't necessarily applied just to turnkey. This is just real estate in general. But obviously, I think the turnkey route is a way to easily tap into this. I mean, we're going to be using very round numbers for example purposes. We'll talk about $100,000 house, and in some parts of the country that $100,000 would be a down payment on a house. There are areas, especially in the Midwest, where we can tap into $100,000 to $200,000 houses that are still in decent locations. But just kind of big picture, and I think this is fundamental or very rudimentary. Most people understand this, but just to review, it's important to know a lot of times when we're looking at rental real estate, we're so focused on just the cash flow, the cash on cash ROI. We know that building wealth in real estate really is a combination of benefits, and that's what allows us to really create generational wealth over time. We call this the ideal investment, this acronym that talks about all the different ways. So I is income. That's specifically talking about the cash flow that we receive from the tenants. Also, you have D would be depreciation and tax benefits. So those are things that you can actually offset, the income of the property, ideally to zero, where you're earning cash flow but not paying any tax on that money because it's offset by depreciation. If you're a professional investor, you can even take accelerated depreciation and offset your active income to allow you to be a more strategic investor and earn income on that money instead of paying taxes. So that's a little bit higher level, but that's a huge benefit of investing in real estate. Equity, we all know that equity grows over time as the tenant is paying the loan down. That builds equity as well as the next point of appreciation. So just holding rental real estate cash flow aside, if you're just holding rental real estate, you will be building your net worth and equity over time as a house appreciates and as that loan is reduced. So all these things combine together to help grow your net worth and income that ideally you would reinvest at some point in time to scale your portfolio and earn those exponential returns. That's where you get this compounding effect, is trading up using all these benefits of real estate. And of course, leverage is, I think, the biggest benefit to investing in real estate, where you can put 20% down but have 100% ownership of the property and take part in 100% of the benefits through leverage. And there's additional tax benefits with that as well. Simple example would be a $100,000 house that you buy with $20,000 down. If that house goes up 5% in 1 year, which is a reasonable appreciation, now the house is worth $105,000. You have a $5,000 equity spread there. Divide that into your $20,000 down. That's a 25% return on investment just from a modest appreciation. So it's important to think about things like that. So going into the example of how to earn $10,000 passive income a month, one example, we'll just use a $100,000 house purchased with $20,000 down. So 20%, that's your typical conventional loan structure. We'll say that net cash flow, so after all expenses, management, tax, insurance, your debt service, we'll say $250 a month, which is a pretty reasonable deal. I mean, we come across these quite often, so this isn't outside of the realm of possibility. So it'd be $250 a month or $3,000 a year. If you're just reverse engineering that, simple math would show you that to get $10,000 a month, you need to buy 40 houses. Now, if they're $100,000 houses, that's $800,000 down. That seems like a significant amount of money just to put down. And while that is possible to do that route, there's a lot of more creative and strategic ways that you can invest to expedite that number without having to be out of pocket $800,000. Perfect example of this would be like a 1031 exchange. So let's go through the same example where someone buys. Okay, so and we already went through this appreciation example, but let's walk through this a little bit more in detail with like how you're building equity to be able to say 1031 that property in the future. So $100,000 house, $20,000 down, like we talked about, 5% appreciation per year, and additional $2,000 loan reduction, because every loan payment that you make, you know, that the tenant is paying for you, essentially the loan is being paid down. So with 5% appreciation, which would be $5,000 plus $2,000 of principal reduction, that will give you, you know, roughly $7,000 of equity per year per house that you own. And then you also have the cash flow from the same example of $3,000. So add that into the equity. Really, you're growing your net worth between equity and income about $10,000 per year. Let's say you hold that property for 3 years. So you're just buying one house in this scenario. You hold that same property for 3 years. We would count the cash flow. And of course, we're being very rudimentary with these numbers. We're not looking at, you know, rental increases over time. We've already factored in vacancy into this net cash flow scenario. So we'll just use this as a simplistic example. Let's say after 3 years, you have $30,000 between your equity growth and your income that, you know, you can tap into to buy another property. So let's say you sell that first house, do a 1031 exchange to buy $200,000 houses, because we have the $30,000 of income and equity plus the $20,000 that you originally put down to equal $50,000 to be able to go out and buy probably 2 more $100,000 houses, right? So really what that means is you invested $20,000 once to buy that first house. You let real estate do what it does over time, and then you were a strategic investor to sell that property 1031 and then trade up to buy 2 properties without investing any more capital. Now you just doubled the amount of real estate you've owned, right? So now you are also doubling your cash flow at $5,000 $500 a month of income, or $6,000 a year annually. So if you kept doubling that up every about 3 years when you're growing that and going through a 1031, you know, around year 15, 16, you would have around that $8,000 a month, only from buying that first house with $20,000 down and then following the normal process of scaling over time. What if you expedited that though? Let's say you bought, you know, instead of buying just one house, let's say you bought 10 houses, you invested $200,000. $200,000 is not actually a lot of capital to be able to come up with via, you know, just savings or partnerships, retirement accounts. So this is within the realm of possibility for many people to do rather quickly, whether it's 1 year, 2 years, 3 years. You know, let's say you invested $200,000 though and bought 10 of those 100K homes, putting 20% down on each one of them. So right year one, you're cash flowing 250 or 2,500 per month. Okay. And then let's say you go through that same process, let all 10 of those houses appreciate, let the loan be paid down, save up your cash flow to reinvest. And let's say in year 3, you sell that portfolio off and you buy 20 houses. And this doesn't have to be single family, right? You can trade up into multifamily, you can 1031 into commercial. The concept is the same, but the idea is being just investing, you know, in real estate initially, and then using those tax advantages. So at year 6, after going through 2 1031 cycles and trading up your portfolio, you could achieve $10,000 a month within a very short period of time. You know, and this is exactly the process that we followed. My wife and I, our first year that I was working in the Air Force, we bought a duplex. Next year, we bought 2 more duplexes. And so we actually tripled the amount of doors that we own. But I mean, you can expedite this and be creative and invest. These examples are assuming that you buy properties in year 1 and don't invest after that until it's time for the 1031. So obviously, if you're buying real estate every single year, this just compounds. So this is, I just wanted to go through this rudimentary example of, you know, how you can really scale, just really letting real estate do what it does and thinking about kind of what the end goal is in mind. And also, as I mentioned previously, we have some exciting build to rent projects that have immediate equity. That means you can, you know, buy one house and then maybe, or build a house that might have $100,000 of equity in a year that you can then cash out, refi, or sell, and kind of expedite this as well. So there are ways through turnkey investing to tap into some more creative ways of investing that have immediate equity to allow you to be a successful investor. Let's go through some property examples here. So this is just in general a little bit of information about some properties that we've done historically in the past. This one is in Indianapolis. This is a property that, just your bread and butter rental. So 134,000 B-class neighborhood, rents out at $1,100 a month. It's two bed, one bath. I mean, very standard rental property that's going to produce a 15% cash on cash return if you're using conventional financing. And my point in showing this example is simply because this can easily be applied to kind of what we were talking about earlier with, those type of numbers. So the investor that actually purchased this house, because of how the market has performed, this property is worth significantly more now. It's definitely had more than 5% appreciation. They probably will go through a 1031 within 2 years. But I just wanted to give you an example of kind of like price points. I would say typical price points for a lot of the houses that we offer between 1 to 300,000 for the single family. We have some small multifamily, 2 to 4 units that might be in that $200,000 to $400,000 range. So there's a lot of different options to choose from. You can see some of the interior photos. This house was completely renovated, and so it's a very nice kind of working class rental property. And those are type of properties that always have rental demand, regardless of where the economy is at. We provide, if you look at our website, rental properties that have a very detailed analysis. This is a calculator that's publicly available on our site that you can go and plug and play some of your own numbers. Some people want to change change vacancy or things like this, down payment amounts. So obviously, these have some numbers that have changed. Interest rates are higher now. So our pro formas are updated. I prepared this, months ago, but you can go in and plug and play with some of your numbers. But the point is, it provides a very detailed analysis. And then we also show, okay, year one projected cash on cash return about 10%. But once you factor in depreciation, appreciation we assume 4% appreciation, which is very modest. And then the principal reduction, all those things compounded, realistically, you're looking around a 40% return if you're adding all those collectively together. This is a newer property that we're building. So this would be one of the build to rents that we spoke about in Poinciana, Florida. So this is smack dab in the middle between Tampa and Orlando, vast, quickly growing area that has high rental demand. These houses are renting out extremely quickly. But the benefit to something like this is, well, it's new construction. So that attracts usually better quality tenants. You have tenants that stay longer. The number still makes sense from a cash flow perspective. But the big benefit is that this house has immediate equity. Now you have to participate on the front end to work on the building with us of this house. So there's a little bit of a delay. It's about 120-day build time for these. But by the time it's done, within 4 months, you have access to about $40,000 of immediate equity because of where the market value is. That means you can sell the property and capitalize on $40,000 that then you can turn around and reinvest into something, or you can pull some of that equity back out with a refinance and be ultimately into this property for less money down. So it's creative things like this that are interesting to look at. And of course, new construction, great A-class neighborhood. This is something that's going to have strong appreciation over time if you were to hold it as a rental. So here's some interior photos of this. And the number, we have the analysis again. So market value is around 355. This is actually, we used the last one that we sold, which was 355,500. So that's the market value for this exact same model. You're into the property with land and building costs around 312,000. So that will give you an example of what to look like there. So again, these are all available on our website if you want to dive in deeper and kind of look at some different investment opportunities. Here's an example of a case study I want to go through. This is a little bit further south in Southwest Florida, where we are actually building single family build to rents. That it's a different model because the timeline is so much longer. I mean, it takes probably 14 to 18 months on the very conservative end to complete these, but these properties have significant amount of equity. I know that Eddie, the owner of Think Realty, is doing some of these exact builds, and he's had great success in this area. But this is just an example I want to go through with an actual case study that was recently completed. So you can look up the address, 2636 Northwest 4th Place in Cape Coral. This is a property that someone was into, well, let's go through the numbers here on this case study. So they bought the lot for 18,500. Now today these numbers are higher, but so is the market value, because this person entered into this contract about a year and a half ago, bought the land for 18.5. Build cost was around 210 at that point in time. So they're all into it for around 230. Took about 18 months to build. They ended up deciding to sell their property instead of holding as a rental. And they sold it for 415,000. So this one actually, completed the sale just a few weeks ago. So they were able to have a gross margin before like realtor costs and things like this of 187,000 within 18 months. And I believe they were down. Their down payment on this was, we'll have to look at that. But they used a construction loan, so they were into it for probably around $40,000. That's a huge return on investment. So not that you have to flip these and sell these, but this is a great creative way where you can be into a property that has immediate equity. Sometimes we get the questions about, okay, if I'm buying turnkey and you guys have already built it or already done the rehab on it, there's no more equity. And in some cases, that may be the case if we've already, rehabbed the house, leased, and it's managed, there may not be a huge equity spread on that, but that's also the trade-off of not having to go out and do it all on your own. The house is already performing as is. However, this is an example of where there could be some creative ways that you can build in immediate equity, do this BRRRR model where you can build it and then refinance out and pull some of your capital back out. If this investor were to hold this property, he would have been net zero into the deal and still had a positively cash flowing property because it rents out at $2,500 a month. But he chose to sell it and then actually, apply that capital to other investments. So we have an analysis projected versus actual, and also this is just part of being in the right place at the right time, investing in the right locations that are in the path of progress, simply because, the market is appreciating, there's high rental demand. We want to be in areas where there's extreme population shifts. Florida is absolutely one of these areas, as many of the areas that we focus on are. Now the market's slowing a little bit, but simple supply and demand would show you that if people are still moving to an area quicker than new housing opportunities can be provided, that's an area you want to be in, and there will still be sustainability of rental increases over time. Last year we saw a 22% rental increase just in this area, and there's still going to be strong demand in the market for sales of these. So hopefully that was beneficial and gave you guys an idea about our company a little bit further, just kind of how turnkey can be a strategic way to scale your portfolio, get started investing, especially if it's out of state for the first time. The importance of networking with a team that has those systems established for you to allow you to be a successful investor. So again, if anyone wants to reach out to learn more about working with Rent to Retirement or just turnkey investing in general, or just market data. We do a lot of, that's what our company does, is identify the best locations to invest throughout the country. So if you just want to talk shop and look at, some locations that might be attractive to invest in, regardless if you do business with us or not, we're happy to share that information. We usually start with an investment consultation with anyone to learn about, your goals and criteria, tell you about the locations we're operating on, and where we're seeing success. So you can contact us at info@renttoretirement.com. There's our website, and get set up with an investment strategist. So I will stop there and then go back to see if we have any Q&A, which I do not believe that I'm seeing any, or comments. I don't know. But feel free to everyone to go ahead and reach out if you have questions. We're happy to schedule a time with you. Hopefully this has been beneficial, and we look forward to connecting with you soon. Thank you.